ARM was just upgraded by Morgan Stanley before we look at the charts. Let's get into the news. So Morgan Stanley upgraded ARM from equal weight to overweight, raising the price target from a buck 7 to a buck 90. Wow, that's a $83 price hike. The investment bank's upgrade highlights ARM's pivotal role in the field of edge AI, underpinned by its power efficiency, compute architecture, and extensive developer community. According to Morgan Stanley, ARM's power efficient compute architecture, huge developer community, and breadth of offerings gives its centrality within edge AI. That was a whole lot of gibberish. Furthermore, Morgan Stanley believes ARM's ability to scale compute efficiently across a wide range of end markets, supported by numerous licensee partners, position it well to capitalize on this trend. Now, the analysts at Morgan Stanley emphasized that ARM products fundamentally to the success emergence of edge AI, which includes mobile, autos, PC, and more. Morgan Stanley has raised its EPS on the company to $3.88 in fiscal year 2027, which reflects an earnings compound annual growth rate of 46%, which is pretty high. All right, and it's reflected in the charts. This is the daily chart, and this is the 200-day moving average. As you can see, it's just getting started as the company went public in September of last year. How does it look like on the monthly chart? Well, if we just extend this monthly trend line, it's still respecting the line. Scrolling down to the weekly chart. Actually, let me scroll to the monthly chart once again, and here's the level of interest. You have monthly buyers at $72. But price is at $158 currently, so is price going to decline this steep? Not at this time. So where else can we look to find an entry? We have a gap at $120, so we'll look at that on a low time frame. We have an inverted hammer, which implies some selling pressure. This is all-time highs, so we want to put a mark there. So these are the two levels of interest that I'm going to look at on a smaller time frame. Let's go down to the weekly chart. Again, that's all-time highs. Price has been basing and gravitating to that 164 level the past several weeks. This is that gap that we saw on the monthly chart. It's very subtle, but here's that gap to begin the week back in early June. And here's that monthly buy level as it stands on the weekly level. You have rally, couple of basing candles, and then the rally out. Again, that was at once upon a time all-time highs. Price nearly got to that buy level, but paused at the 26-week moving average. I like this wick over wick, so let's look at that on the daily chart. And here's the level. Rally, basing candles, and then the rally out. And that comes at the $135 level. So let's put now, yes, the Nasdaq has been declining. I don't anticipate it declining too much longer, so I don't anticipate price getting to that daily buy level. They do have earnings later this month. Anything is possible. If you get a huge sell-off, that would be the opportunity to go long. Thanks for watching. Subscribe. Please like the video.